Hi guys, and welcome to the Dividend Stock Buy List channel. And what I'm generally going to be doing on my channel is just sharing with you some of the ideas that I'm seeing out in the market for buying dividend stocks. So there's a lot of things that are built into this, and that's all in my spreadsheet here that I kind of live on every time I'm looking for a new investment. So as I mentioned, I only look at dividend stocks. They're the only thing that I'm interested in. I'm not looking for the newest growth company. So if that's what you're looking for, you're on the wrong channel. With the dividend stocks, I like the margin of safety that you have, that you're going to get paid no matter what for holding on to these stocks. If they crash, there's a high likelihood that you're still going to get paid your dividend. With the growth stocks, that margin of safety is just not there. So I find this to be a more conservative, prudent way to go about investing. I'll get into more details on that on future videos. But I want to get right down to kind of looking at the spreadsheet here and what's baked into it, and give you a few things that I'm looking at right now as potential buys this week. So you can see, starting over on the left here, I of course have the tickers and the company names, the current stock price, the fair value here. This is the Morningstar value. So they don't give projected prices. They say what the actual value of the company is, which is something that I really like. So at any given time, there are a number of stocks that are overvalued. There are a number of stocks that are undervalued, but they are taking a very rational approach to valuation. On Morningstar, they're generally a little more conservative than a lot of the other analysts. So that's part of why I like using Morningstar. I like that they are on the side of being conservative. The next column over here, this is the discount. So this is the discount that these stocks are running at. By the way, right now I follow 175 stocks. These are all stocks that I've had recommended from different like-minded individuals. I would by no means say that I'm an incredible expert on any of these stocks, but I think what I am good at is gathering information, and that's what I plan to pass on to you here. So once we move over to the next column here, this quality, this is Dividend Sensei from Seeking Alpha. A lot of times he'll publish his quality scores. This is on a scale of 1 to 11. So you'll notice also that I make some of these green, this nice bright green. These are just the level 10 and 11. These are the sleep well at night stocks that are the 10s and the 11s. So those are the ones that I would most prefer to be using. And this goes again back to that margin of safety. The growth, this is a David Knapp's scale, where he has a scale from 1 to 25, where he takes into account things like the Simply Safe Dividend score, the moat from Morningstar, which I also use here, the credit ratings, things like this. I'll link below to his last article. And what I included in my green here are the stocks that go up to go from 20 to 25, and these are the ones that were able to hit one of the highest two levels for each of the different criteria. So they're strong in not only having a strong moat, a safe dividend, a great credit score, things like this. So they're excellent stocks to focus on. Then the next three, these are back to Morningstar, the moat. So this is how safe the stock is. So this is the Morningstar score. So a wide moat is going to be the what you're looking for, preferably. These stocks have incredible competitive advantages. They're very hard to knock out of business, to even really do any damage to their business. And I have a general view that the strongest businesses, I wouldn't say it's impossible to knock them out, but it takes an awful lot. So the wide moat businesses I feel very safe with. Then you also have like the no moat choices here. So I do follow ET Energy Transfer. I see this one mentioned in a lot of the dividend growth stock articles these days. I'm not interested in Energy Transfer, and it's the no mode. The uncertainty, again with Morningstar. So the low moat, or I'm sorry, the low uncertainty. These are ones that we can count on a little more. The high moat, the high uncertainty. Keep jumping between moat and uncertainty. The high uncertainty stocks are the ones that we want to be avoiding here. These are the ones there's a lot more volatility. There's a lot more that could go wrong. And finally, we have the stewardship. So basically, how good are the people that are running the business? What's their history? So an exemplary, that is the highest rating, and the poor rating, I think there's only 2 or 3 stocks that I follow where there's a poor rating on the stewardship. The safety here, this is on Simply Safe Dividends. So obviously 99 is very good. That's the highest rating that you can get. So Albemarle here looks good on that. Then you get down to some of the lower scores, like down here, MPLX at 41. So that's saying their dividend is a bit dangerous. There is a chance of it being cut. So then over here we have the sector that these stocks are in. We have the dividend that they're paying, and this is the dividend percentage over here. You'll see the green that comes up on stocks that are 3% or higher. So for me, I wanted to go ahead and highlight a few of the stocks that I'm looking at right now, and maybe quickly go through a few of them that I'm just skipping past on here. I'm getting pretty overweight in energy. That's been the beaten down industry. So I'm skipping past a lot of these. I've just been adding my last tranche here on EPD, Enterprise Products. So from what I've seen with EPD, they seem to be the safest of these companies. So there's quite a few of these in here, Energy Transfer, Enbridge, MPLX. But EPD seems like if one of these companies is going to survive, they're the ones with the strongest assets. Their dividend is much safer than some of the other similar stocks. You'll see theirs is listed at 89 here on the Simply Safe Dividend score. Energy Transfer is at 56, MPLX at 41. So those are in a bit of danger of getting cut. EPD seems quite safe, and that's as of recording at a 6.82% yield. So very nice yield. I'm also looking right now at Albemarle up here. So they're in the basic materials sector. They focus on lithium. That's their big use. So with the batteries and things like that, that's their industry. So they're a level 10 quality company. There is high uncertainty right now. What I would say with Albemarle is I think they're a company that I'll be adding slowly to. I think it'll be a couple years before their coiled spring gets triggered, so to speak. So I think this is one I'll just be trickling in a little bit at a time, maybe drop a little bit each month. I'm not expecting it to jump immediately, but I think it's one in time that will jump quite a bit and might have an amazing capital gain on it. I'm not terribly excited by the 2.26% dividend, but I'm glad it's there. Okay, so skipping a lot of these energy stocks and others here. Then the next one, I actually just bought in my first tranche on this one yesterday, which is ticker symbol MSM, MSC Industrials. If you look here right now, they're showing about a 13.75% discount. Quality is 9, so that's a strong blue chip company. narrow, medium, and standard across here. So pretty standard, strong company and a safe dividend. If you can get a safe dividend on over 4%, I think you have to be pretty happy with that. Next company that I'm looking at is Bristol Myers Squibb. Unfortunately, I've been looking at them for a little bit and wanted to get in, but was running a little short on cash. So I missed my window a little bit, but I still think they're a pretty strong buy here. They're running, about 11.68% discount. Quality is 9. 23 on David Knapp's growth scale, so that's quite good. They have a wide moat. I think there's really a lot of potential for major jumps here in the capital gains on this stock. So it's one I'm going to be looking closely at. I kind of wish I had jumped before, but on the next dip, I will jump on this one pretty hard. And then the last stock for right now, I am really underweight in technology. I guess this is part of focusing on the more boring stocks and not on the big growth stocks. But CSCO is another stock that I just bought my first tranche on yesterday. So they're, I would say, a little bit undervalued, not massively. But I think it's a good point to buy right here. So they're a blue chip company, level 9, the David Knapp scale 24, so 24 out of 25, which is very, very good. And then the safety score is 91, so a very safe 3.13% dividend. So I wouldn't say that these are necessarily the same stocks that you should be buying. In future videos, I'll go into more detail about why I'm maybe ruling out some stocks. But these are good stocks to go look at. I'm not an investment advisor. I would recommend that you go out and do your own research, but this gives you some of the ideas of the stocks that I'm looking at right now. Hope you found this video useful. It'll be my plan to try to get one of these videos up every week to give you some idea of some good stocks that you could be looking at and the stocks that I'll be looking at. So thanks for watching my first video here. Much appreciated.